Justin, Mr. Bruce, can you hear me? All right, thank you. I've been able to get feedback that I can be heard. As I was earlier saying, that my name is Asichone Chanda, and I'll be your moderator for this town hall meeting. I will kindly ask that we I'm looking at the time, it's 15:02. So we just give ourselves 3 minutes and then we start at 15:05. Thank you once again for joining us, and thank you for your patience. A good afternoon once again, seeing that the time is exactly at 15:05. As I earlier mentioned, my name is Asichone Chanda, and I'll be your moderator for today's town hall meeting. Just a few housekeeping rules. Mr. Bruce will make his presentation, and then thereafter we shall open the platform for any questions that you may have. But whilst he's making his presentation, please feel free to type your questions in the comment section, and we'll be able to respond to you or point to you in order to ask your question or read out, or I'll read out that question to Mr. Bruce for him to answer. Without much ado, I will hand over to Mr. Bruce to begin his presentation for today. Over to you, Mr. Bruce. Thank you.
Thank you so much, Johnny. Let me just share my presentation. Johnny, are you able to see my presentation? Johnny, are you able to see my presentation?
Mr. Bruce, have you started speaking yet? We just wanted to clarify if Your mic is
Yes. Can you hear
unmuted.
me? It's unmuted. Can you hear me?
Or it's unmuted.
Shona, can you now hear me? Okay. Good afternoon, everyone. I hope everyone can hear me. I suppose Shona has already introduced me. My name is Bruce Mulenga. I manage market transactions at the Commission. Today's presentation is themed Let's Talk Rates. In terms of the outline of my presentation, it's as follows. I'll have an introduction. Then I'll go on to speak about what a REIT is. Then I'll delve into the structure of a REIT and look at the benefits and the risks of investing in REITs. I'll also cover the legal framework with regards to REITs. And finally, I'll look at the silent features of the REITs guidelines that the Commission issued in 2020. So in terms of the introduction, I'll briefly touch on the Capital Markets Master Plan. As you are aware, the Ministry of Finance did launch the Capital Markets Master Plan last year in December. The Capital Markets Master Plan is essentially a 10-year long-term strategy for the capital markets development in Zambia. The Capital Markets Master Plan basically provides a clear roadmap for capital market development in Zambia, and that's to reposition the Zambian capital markets as an important conduit for domestic and foreign investments for the purposes of bolstering the Zambia's economic development. Now, some of the aspirations under the Capital Markets Master Plan include: we want Zambia to be rated as a frontier market by 2026. We also aspire to have the LUCE capital markets, the LUCE market cap as a percentage of GDP to be 27% in 2024 and about 33% in 2031. We also aspire to have the number of listings to be doubled by 2030. And we intend to diversify the product landscape by introducing innovative products such as REITs, green bonds, and exchange traded funds from 2023. Now, for us to achieve this development, what's articulated in the master plan is that this development would be achieved through 5 development areas. And these 5 development areas include enhancing the government bond market, enhancing other traditional securities markets, that's the equity and the collective investment schemes, development of new and innovative products and markets, which is the focus of this afternoon. Enhancing capacity building across the capital markets, and finally, enhancing the capital markets regulatory framework. Now, if I may just drill down to the development of new and innovative products. The capital markets master plan. In the capital markets master plan, there is a recognition that the product landscape in Zambia is very limited, predominantly being shares and bonds. Therefore, there's need to diversify the product range by introducing innovative products such as retail bonds, exchange traded funds, REITs, and green bonds, securitization, private funds, and products that leverage on technology such as crowd funding. In terms of progress, we've made some progress in that some of these are proposed products to be introduced. We do have a framework, for example, on the green bonds. There's a green bonds guideline, and we also have a guideline on private funds and also on REITs. So, what is a REIT? REITs are not new. They were first created in 1960, where the US Congress wanted to figure out way to allow the public to invest in larger income-producing commercial real estates without actually buying the property. So REITs essentially own large income-producing commercial real estate, such as office buildings, apartment buildings, shopping malls, warehouses, etc. So a REIT essentially stands for Real Estate Investment Trust. A REIT is essentially a collective investment scheme that invests in real estate, where different investors come together to pool their resources and invest in real estate. So you may ask the question that why have REITs when we have real estate collective investment scheme? The short answer really is it's basically to diversify the current product landscape, and furthermore, although a REIT is a collective investment scheme, a REIT has certain features that distinguishes a REIT from a real estate collective investment scheme. Among the notable features of a REIT that distinguishes a REIT from a real estate CIS is that there's a mandatory requirement for a REIT to distribute a specified percentage of its income to unit holders, or should I say shareholders, under the REITs guidelines, which is about 80%. Different jurisdictions have different percentage ranges, but usually the range of the percentage to be distributed to shareholders or unit holders is between 75% to 90%. So these are some of the distinguishing features of a REIT. So in a nutshell, a REIT operates and manages a portfolio of income generating real estate. A REIT is closed-ended, which means that the number of units or the number of shares that the REIT will issue are fixed. They don't vary as compared to an open-ended CIS. REITs give investors access to the benefit of owning high-quality real estate assets in small ticket sizes, because the price of the units are quite small, but you're gaining access to quality properties. REITs are listed on an exchange, and investors can buy REITs units or shares just like they would buy shares of a listed entity. So generally, there are two main types of REITs. The first one is called an equity REIT, and the second one is called a mortgage REIT. So an equity REIT is a REIT that actually physically invests in the commercial real estate. So an equity REIT owns a wide range of property types, including offices, shopping malls, apartments, warehouses, and so much more. And it derives its revenue from the rents from the properties. On the other hand, a mortgage REIT invests in loans. They make money out of the loans that they lend out. And mortgage REITs usually finance both residential and commercial properties. However, the most common types of REITs are the equity REITs, and these are the REITs which the Commission currently is regulating and has issued guidelines. So in terms of the structure of the REIT, the most common legal form of a REIT is a company or a trust. And the Securities Act allows for both types of legal forms. So where the legal form of a REIT is a company, the custodian takes the place of the trustee and assumes the responsibilities of, assumes the functions of a trustee. Now, depicted on the screen is a typical structure of a REIT. In the center, in red there, you have the REIT. And on the top left, you have a sponsor. The sponsor of the REIT is normally the REIT manager. The REIT manager will register the REIT if the REIT is a company. And if the REIT is a trust, the REIT will come into existence upon establishing a trust by the REIT manager. And usually the REIT manager, as a sponsor, will usually put in the initial assets in the REIT. And after the offer is opened, that subscription from the investor will go towards the sponsor. So the REIT manager must be a licensed entity. It must be licensed as a dealer under the Securities Act. Essentially, the role of the REIT manager is to manage the REIT on a day-to-day basis and make investment decisions and carry out any other functions under the management contract. There will be a management contract between the REIT manager and the REIT. The REIT manager is also responsible for the appointment of the trustee, and the trustee must be independent of the REIT manager. On the right-hand side, you have the trustee. The trustee's obligation is to exercise due diligence in the monitoring of the operations and management of the risk of the REIT, and basically ensuring that the REIT manager is complying with the provisions of the trust deed. The trust deed is the document that creates the REIT. The trustee also has a fiduciary duty to hold the assets of the REIT in trust for the benefit of the unit holders or the shareholders, and ensure that all investment activities carried out by the REIT manager are in line with the investment objectives and policies of the REIT, and basically in the best interest of the unit holders or the shareholders. The property manager on the left-hand side in dark green there is appointed by the REIT manager with the consultation of the trustee. The property manager basically is responsible for maintaining the assets of the REIT so that the assets are in a marketable condition. Therefore, the property manager ensures that the properties of the REIT are well maintained. The other responsibility or function of the property manager is to ensure that all material contracts, including rentals and lease agreements, entered into on behalf of the REIT are valid, and they are binding and enforceable, and on behalf of the REIT. Finally, there's the unit holder or the shareholder, who's the investor, and this is the party that receives the distributions that are paid out by the REIT. So, in a nutshell, that's the structure of a REIT. So, what are the benefits of investing in a REIT? REITs can offer a wide range of potential benefits. However, like any other investment, REITs also do have risks, and you need to understand those risks. You should seek an independent advisor. You should seek independent advice from a professional advisor before investing in REITs. Now, let's look at some of these benefits of investing in REITs. The first one is liquidity. REITs units or shares are listed, therefore they are freely traded on the exchange like equities. Therefore, they're more liquid compared to real estate CIS, which is usually not listed. They're transparent in the sense that there's a strong governance framework That is the Securities Act and the subsidiary legislation, which includes the REITs guidelines. And there's also disclosure requirements that needs to be made by a REIT. So in that sense, they tend to be very transparent. In terms of the asset quality, REITs enable you to have fractional ownership in a professionally managed big ticket commercial assets. Remember, I did allude to the fact that you can buy a share of a commercial property with a minimum amount of money. In terms of distributions, REITs offer income stability due to the requirement to dispute a specified percentage of its income to the unit holders or the shareholders. In the case of the REITs guidelines, a REIT is supposed to or is required to distribute 80% of its distributable income. Professional management. REITs are managed by experienced professionals who handle the leasing, maintenance, and other operational aspects. Therefore, investors can benefit from the expertise of these professionals without the daily burden of day-to-day management responsibilities. And the last benefit I have there is diversification. And this is through investing. Investing in a REIT can give you instant access to a large property portfolio for a small upfront investment. Now I'll move on to the risks, or some of the risks that are associated with investing in REITs. The first one is concentration risk. While some REITs provide access to a diversified portfolio, others may concentrate on a few large assets, such as shopping malls or a single sector. This can lead to risk if that sector is not performing well. The other risk is property cycles. Real estate can be sensitive to macroeconomic factors, and they can be sensitive to macroeconomic factors and market cycles. So this may impact your returns when the market environment worsens. The next risk there is volatility. A REIT may also be sensitive to movement in the broader share market because they are listed. This could lead to higher levels of volatility which a direct property investment is not exposed to. So as a result, the market value of a REIT may not always reflect the net asset value of the underlying property because of this volatility in the price of the the unit of the REIT or share on the stock market. Interest rate is another risk factor in the sense that rising rates can have a negative effect on the REIT performance, both by increasing interest costs and by making fixed income investment more attractive to income-oriented investors, potentially reducing the overall demand for REITs. The last risk I have on the screen there is slow growth. Remember, I did allude to the fact that a REIT is required to distribute a specified percentage of its income to the unit holder. So, for example, in Zambia, the required distribution percentage is 80%. So this means that the REIT only has a 20% left for reinvestment into its core business. So in this case, therefore, growth can be slow because the requirement to distribute a substantial portion of the REIT's income is quite high. So these are some of the risks of investing in a REIT. So what's the legal framework regarding a REIT? So in terms of the legal framework governing REITs, these are the Securities Act of 2016. This is where the Commission gets its mandate to authorize collective investment schemes. And yeah, this is the main source for the Commission's mandate to authorize collective investment schemes. The Securities Act also has provisions to do with the revocation of collective investment schemes. And it also has the provisions that give the Commission to make rules for collective investment schemes, such as the REITs guidelines that the Commission issued in 2020. Next is the Securities Collective Investment Scheme rules. These contain the detailed authorization process and operational rules and disclosure requirements for collective investment schemes. Then we have the REITs investment guidelines. So these guidelines are essentially anchored on the Securities Collective Investment Scheme rules, and the guidelines provide additional requirements relating to the REITs. Then we also have the Income Tax Amendment Act of the Income Amendment Act number 43 of 2021. This contains the tax treatment of the REIT income. A REIT has been listed in the second schedule to the Income Tax Act, which means that the income of the REIT, which means the income that the REIT receives is exempt from tax. However, when the REIT makes a distribution to the investors are taxed, and that's depending on their tax status. So in a nutshell, these are the pieces of legislation that speaks to that govern the real investment trust. Then I'll look at some of the silent features of the REIT. So in terms of qualification of a REIT, it must be closed-ended. That means the number of units and shares must be fixed. It must have a minimum of 2 investors. The minimum value of the initial assets of the REIT should be 50 million kwacha. At the time that we were doing the guidelines, this 50 million kwacha was equivalent to $1 million. A REIT must have a minimum of 80% of total assets, which will comprise of real estate. A REIT shall derive a minimum of 80% of its income from rentals. There's an expense ratio. So the operating cost of a REIT must not exceed 30% of its revenue. The rationale for this is to encourage the REITs to control their expenses so that they can maximize on what they can distribute to the unit holders. So 80% of its distributable income shall be distributed to unit holders or shareholders. So those are the qualifications in terms of a REIT. Now, in terms of the investment restriction, a REIT shall invest a minimum of 80% of its net assets in real estate and a maximum of 20% in cash and cash equivalent. The cash and cash equivalent is basically treasury bills. A REIT is not supposed to invest more than 25% of its net asset value in a single property. This is basically to encourage the REIT to diversify its assets. A REIT is prohibited from investing on vacant land or participating in development activities. Hence, that's the reason why it's an income-generating REIT and not a development REIT. So the properties that the REIT is supposed to acquire are those properties that are fully developed and ready to be occupied. In terms of distribution, a minimum of 80% has to be distributed to unit holders, and this can be done on a quarterly basis, half year, or annually. And the distribution should come from realized income, realized gains, or from cash which is surplus to the REIT. In terms of borrowing, a REIT is allowed to borrow on unsecured or on a secured basis. And the trustee may provide security over the assets to secure the borrowing. And in terms of the limit, a REIT is restricted to 35% of its total net asset value. So it can only borrow to that extent. I've come to the end of my presentation. Thank you so much for your time. I'll now take some questions.
Mr. Bruce, thank you for that lovely presentation. Without much ado, there's a question from Salome Nakazwe in the chat section. Salome asks, who are the trusted recommended advisors on REITs that one can reach out to?
Thank you for that question. Basically, it's you can approach licensed financial advisors. The Commission does license investment advisors, and we do have a list on our website of the licensed financial advisors. So you can approach any one of them who's licensed.
I hope that answers your question, Salome. There's another question from an anonymous attendee. What income of type does ZRA deem income from a REIT? I hope that question was phrased correctly. So I repeat.
So the income of a REIT is substantially rentals. Remember, the REIT owns commercial buildings which they are subletting, and so the tenants are paying the rentals. So the income that ZRA will look at is the rental income of the REIT. But remember, in my presentation, I did mention that a REIT is exempt from tax from the tenants. It will receive the gross without deducting withholding tax. But when that rental, 80% of whatever is collected, is distributed to the investors, the recipients, the investors, will be taxed, will have to pay tax. So the fact that when the REIT receives gross from the tenants, it's for the benefit of the investors, because the amount that the REIT has to distribute is increased because the REIT is not paying tax from the rentals that it's receiving. However, just because the REIT is categorized as tax exempt under Schedule 2, if the REIT does not distribute to the unit holders, ZRA would tax the REIT. So it's in the best interest that the REIT does make the distribution. Otherwise, it will pay tax. I hope I have answered the question.
All right. Then there's another question from Maurice Trillion. He says, what are the current rates that one can invest in?
I don't think I'm in the right position to answer that question. I think that question should be directed to a financial advisor. That's what I can say for now.
Okay, that's well noted. Then an anonymous attendee says, hello, Bruce, can you please clarify on how to apply for a REIT status?
Okay, the first thing is there must be a sponsor, and usually the sponsor is a REIT manager. So the REIT manager, first of all, has to be licensed as a dealer. And then once a REIT manager is licensed as a dealer, then it can now apply for authorization of the REIT. after all the necessary documentation has been put in place, for example, there's a trust deed that's entered into contracts with the REIT, it's entered into contract with the property manager, it's entered into a contract with the trustee. All the necessary documents required for the formation of a REIT are in place. Then the manager can apply to the commission for authorization of the REIT. The process usually takes the applicant should hear from the commission within 90 days of receipt of a complete application. So in a nutshell, that's the process of getting a REIT status.
Okay, thank you, Mr. Bruce, for that answer. Let me also open up Mr. Kasanga Sichoni's microphone, just so that we can ask his question. I see he raised his hand.
Thank you very much. My question is, what is the REIT's track record and historical performance in our market? I think that's my first question. And the other one is, how is the liquidity in this market in Zambia?
Thank you for those questions. To tackle the first one, in terms of the history, we don't have any history of REITs in Zambia. Remember, during my presentation, I did allude to the fact that we only had REITs guidelines published in 2020. Further, I did mention that we've got Capital Markets Master Plan, and in that plan, there is a recognition that the product landscape in Zambia is restricted, and it's predominantly shares and bonds. Hence the reason why we are introducing REITs to diversify the products. Hence, there's no history in Zambia, but I can state that we're hopeful that by next year, we'll have the first REIT in Zambia. So the second question relating to liquidity, even though we don't have a REIT market as such, but I can assure you that REITs will be more liquid compared to real estate CISs, because we've had an experience with real estate CISs. They're not liquid. And hence, one of the solutions to bringing that liquidity is by introducing a product like a real estate that will be listed, and we're hopeful that it will be liquid.
Okay.
Thank you very much.
Thank you, Bruce, for that response. Kaulu has asked a question saying, thank you for the information and lesson. Re-evaluations of property have potential for creating accounting, which may be bad for investors. Are there any safeguards the Commission has put in place in this regard, apart from the stringent accounting requirements listed firms have to go through? Can a private limited company, in brackets, non-PLC, be a REIT manager?
Thank you for that question. I do agree with those sentiments, especially when you talk of real estate. There is room for manipulation. However, if you look at the guidelines, I think we've got enough provisions to prevent manipulation in terms of values of assets. If you look at the guidelines, we've got provisions such as the one that speaks to how value was appointed. From the top of my head, I can remember that not every Jim and Jack can do a property valuation. If valuers have to be licensed by the appropriate bodies. So if you don't have that practicing license as a valuer and are not a member of the right regulator, then you cannot do property valuation. So we've got enough safeguards in the guidelines. I hope I've answered the questions, Stan.
Okay, thank you for that lengthy response. Kaulu, are you still on the call? Just in case, because I saw it was a very lengthy question. Just trying to be sure. If you could just raise up your hand, just to be sure, we can open the mic for you if there's a follow-up to that. But in the meantime, there is a question from, just give me a second, Claire Kangombe. She asks, which institutions or brokers are registered to allow individuals to invest in REITs?
Okay, I didn't mention earlier. I think there was a similar question here. I think it was the first question, if I'm not mistaken. So you can approach licensed investment advisors. We have a list of authorized or licensed investment advisors on the website. So you can approach any one of them and they'll be able to advise you.
Okay, thank you for that response, Mr. Bruce. Kaulu, your mic is unmuted. We just wanted to get feedback if the question was adequately answered.
Well, thank you so much. Yes, my question has been answered, and the second one was also answered in the response to one of the other participants' questions. So I'm okay. Thank you.
Okay. All right. Thank you for that feedback. There is this question from anonymous attendee, Mr. Bruce. I don't know if, let me just still go ahead and ask it. What kind of mutual fund is allowed to carry out property development in Zambia? That's anonymous attendee.
Okay, at the moment, there's no real estate CIS that's doing property development. The current real estate CISs that we have at the moment have fully developed properties. I'm not aware of any real estate CIS that's actually developing a property. Maybe also to mention that the other type of REIT, because right now the guidelines that we've produced are strictly applied to income generating REITs, not property development REITs. There's another type of REIT which is allowed to do property development. We thought it wise, first of all, to start with REITs that will purchase fully developed properties to start with. Then later on, once the market matures, then we can introduce the development REITs. As you may be aware, there are risks associated with development. So in short, I would say at the moment, there's no real estate CIS that's developing a property.
Bruce, thank you for that response. I think we will just take one last question. There's just one last question. Yes, and do Milapo, I will definitely share the presentation to your emails. Then anonymous attendee asks again, are these real estate collective investment schemes listed on LUCE? Hello? Hello?
Sorry, sorry. So
okay.
to answer the question, it's mandatory for a REIT to be listed. The guidelines that we've issued makes it mandatory. So all REITs that will be authorized by the Commission will have to be listed on the LUCE or any other exchange in Zambia. So the short answer is yes, they will be listed.
Okay, thank you, Mr. Bruce, and thank you for the lovely presentation that you have given us. As you may all be aware, we've had quite a huge interest concerning the topic. If there are any questions that have not been attended to, please bear with us. We'll do our best to try and respond after the presentation has been made through email. On top of that, we'd like to remind you that the presentation will be shared will be shared just within the next 1 hour or so. And please look out for the next town hall meeting next month, I'd like to believe. And thank you once again for your attendance and participation, for all those who took the time to ask questions. We appreciate. We know for a fact that others were able to learn from you, even as you were asking those questions. Without much ado, my name is Osichone Chanda, and I've been your moderator for this town hall meeting. Thank you for your time and enjoy the rest of your day.
Thank you so much. Thank you, everyone.